talking about financials and microfinance. Let's welcome on board Sadaf Sayeed, CEO at Muthoot Finance. And Mr. Sayeed, thanks so much for joining us this morning. Help us make sense of the impact of the regulations that we've seen on Friday on your company. The RBI has revised NBFC microfinance companies' qualifying assets to be minimum 60% of total assets versus 75% earlier. This seems to be largely positive for the companies in your sectors. So help us understand, how will the new norm provide greater operational flexibility, and how will this enable to diversify your current portfolio?
Yeah, good morning. Thanks for having me here. I think the recent RBI norms are very, very positive for microfinance. Earlier, there were 75% qualifying asset requirement, which means that 75% of the asset on the book of a microfinance had to be microfinance JLG loans or unsecured loans. These were based on the total asset of the balance sheet, which includes cash and cash equivalent as well. So there was a little room for doing diversification, but now the new norms allows us to build 60% microfinance asset and 40% could be diversified asset. So it really helps us in first of all diversifying our books, which will mean that the risk on the balance sheet would reduce, but at the same time it will also allow us to serve our customer in a better way. In our recently concluding earnings call, we have already outlined our efforts to diversify our portfolio and provide services to our customers, which they are availing from multiple financiers. So we have seen that almost 37% of our borrowers have trade lines with other lenders in form of gold loans, in form of two-wheeler loans, in form of housing finance as well. With the easing of norms, which RBI has announced, we'll be able to provide one-stop solution for our customers, and they would not have to kind of navigate multiple lenders and multiple EMIs. So it will become a lot more efficient from a borrower perspective, and also it will allow an earning line for a microfinance institution, also a well-balanced portfolio mix, which will augur well for a long-term growth of an organization. And one of the things that I was also hearing your previous speaker mentioning, that the microfinance lately has been having a challenge of growth. This will also allow us to grow in a new segment because there are certain restrictions that have been imposed by SROs in terms of multiple lending to avoid over leveraging of the borrowers. But these are new segment of assets which can be offered to the customers, and the microfinance institution like us, which is a large customer base around 3.4 million, have a presence in around 1,700 branches across the country, can utilize this liberalization of the policy and extend more loans to our customers.
Sadaf, hi, morning. The RBI notification is also stating that if an NBFC or MFI fails to maintain the qualifying assets as per the threshold for 4 consecutive quarters, it shall approach then the Reserve Bank with a remediation plan for taking a view in the matter. Tell me what is the current practice and how different is this now?
So far, I think, as far as I know, most of the microfinance entities have been able to manage the qualifying asset criteria, which was fixed at around 75%. Only in the recent quarters, because of the delinquency situation and the availability of fund liquidity squeeze, the people wanted to carry a little bit of a cash on the balance sheet. That's why some of the MFIs have breached those qualifying asset criteria, but just marginally. We as an organization have been successfully been able to maintain the qualifying asset well above 75%, so we don't have such a major issue. But then again, RBI is a very supportive and a very pragmatic regulator. So they have given these guidelines to ensure that we focus on a marginal segment which is not getting access to credit. But at the same time, if there is a breach for a logical reason, RBI is very accommodative and they are able to understand. I think 4 quarters, which RBI has given as a guideline, is a good enough time to recalibrate and make sure that your asset mix remains in the guideline frame.
Other than that, what we see happening with the industry, so many guardrails have been implemented in the microfinance sector, and the new guardrails have been implemented from April. So help us understand, how has this impacted your business in the last 2 months?
Yeah, definitely. I think the guardrails which have been recommended by both the SROs, MFIN as well as Sadan, are from a perspective of ensuring that the long-term sustainable health of the sector, even though the disbursements have come down over the period of time because of stricter guardrails, but that means that more elaborate credit underwriting is happening. So the fresher book that is being built is being much more healthier and less leveraged. Customers are being serviced. So that, in my sense, augurs well for the sector as well as for the individual entity. Of course, in a short run, these are impediments in terms of disbursement, you can say so. But I think at the cost of building a good quality book, I think these are a healthy steps that the SROs have taken. And the good part about it is that the whole industry has come together and decided on this, and everybody is implementing this in a true spirit. So, which is very good for the sector. I'm sure it's a short-term measure in a sense that considering the current environment, these policies have been implemented. Once things are slightly better, which I think will happen very soon because RBI has taken very prudent step in the monetary policy. I'm sure, I think these guardrails would be relaxed in some time.
So good having you on the show, and hope to speak again, considering the RBI move would definitely aid your business a whole lot.
Likewise, thank you very much for having me.
Okay, let's shift focus now.